So I think if I look back over the recent cycle, which would suggest that the cycle is coming to an end, it's been one that's been characterized by growth, optimism, pushing forward, exploring different strategies outside the traditional asset type within the real estate industry. I think that's the first thing. And then I think more recently, 2023 was a year that was very focused on taking stock, observing what was happening on the market, keeping liquidity reserves, not being the first to jump. A lot of investment managers and investors have taken the choice to look around, see what's happening in the markets. And, that big question is out there with regard to liquidity. And with that lack of liquidity in the market, it's been very difficult to establish fair value. So that is definitely a point that has put a lot of weighting into the market. And I'm hoping that going into 2024, we are much more a market of not waiting, but taking act and investing in strategies in which parties have strong conviction. So at LaSalle, we have the benefit of investing in all the different asset types in real estate. We also have clients with whom we invest in all the different risk profiles on the equity side and also on the debt side as well. So that gives us a very good viewpoint in which we can look at market movements in the different geographies across Europe. I would say that one thing we have observed over 2023 has been a different dynamic in the different markets. I'll take the example of France, which is often known for its stability, whereas in 2023, the lack of transactions and the limited correction in value has actually done it disservice to a certain extent, because investors looking for the bottoming out of pricing have not felt satisfied that that's happened. Maybe logistics is a little separate to that, and I can come back to that in a moment. But if I look in comparison to the UK markets, and I'm referring in particular to London, but to a certain extent in the regions, there's been a stronger correction in value. So those changes came in earlier. They were observed also by valuers. They had a pretty negative impact on some values to a certain extent. However, it did mean that the market regained its liquidity a bit quicker. It's not fully liquid just yet, but in terms of gauging pricing, be it on the leasing side, the rental value expectations, or be it the yield curve, it's moved forward. France is not there yet. There's still very high demand for a lot of strategies, in particular the value-add strategies, in which LaSalle has a lot of conviction, so we're not alone. There's quite a big depth of capital there, which is very surprising compared to the core space. So that does show conviction in these strategies and the conviction to take risk. But looking forward, it will be closely watched the price at which these transactions do take place, and then of course the strategies and the risk appetite of those that take them forward. So if I look at the strategies looking forward into 2024 and beyond, I think it's interesting to assess what investors are actually seeking to gain from investing in real estate. So at LaSalle, we have a very wide range of investors, across the globe, who are multi-asset class investors. So real estate is the only thing that LaSalle does, but for our clients, it's not necessarily the case. So it's really assessing what the real estate asset class is providing those investors in their portfolio. We've seen a shift in particular towards some long income strategies, and we've also seen a shift to the other extent to value add strategies. So quite a bifurcation there. Whereas the core plus category continues to deliver very strong returns, in particular with portfolios that are very well diversified, like the ones we have, we can see that investors are assessing their expectations of real estate. If you look at which asset classes in particular are of interest to investors at the moment, I think it's very wide-ranging. It depends very much on the geography. I would even go as far to say it depends on the micro-location. Even in a city like Paris, the demand for investment product, for example, in the office space is very, very different in the centre of Paris than it would be in the outer suburbs. That would be no surprise to anyone. It's similar with regard to residential. So residential living and hospitality, that whole category there is of great interest to LaSalle. But to different effects in different markets. So there's certain geographies that we have strong convictions, others we see too many barriers to entry. So it's really looking at the different style of real estate as we look forward. Our convictions lie in three main categories. So first of all, we're looking at different asset types that have very high barriers to supply. So, for example, in Paris, the impact of the PLU that's coming in, so the planning within Paris is going to have constraints, and that will impact the way that the real estate market functions. That in itself could be an opportunity, even though the initial reactions have been a bit of a challenge. Secondly, we're looking at debt strategies. In particular, we have quite a large lending business at LaSalle, and that gives us an opportunity to look also into different asset types and take the position of a lender in the different categories of risk that we wish to take on that. And then thirdly, we're looking at operating strategies. So working with operating partners, looking at how the real estate within those portfolios generate income, also preservation of value, but most importantly, as it's an integral part of their strategies for delivering on their objectives.